Welcome to No Worries Finance. I'm JD, and we're here to talk about debt and money issues in the hopes that one day you can be debt-free and financially flexible. Because life is a lot more chill when you have no worries in your financial life. If you're interested in seeing more videos just like this one, then hit that subscribe button below and we can take this journey together. Today's video is on market timing and whether or not you should attempt to do so with your investments. This line of thinking can apply to any form of investment. It doesn't need to be the stock market specifically. Timing the market is the big dream of investors. The idea of market timing is that you try and predict how the market's going to perform in the future and then invest accordingly. For example, if you believe that the market or a particular investment is going to experience a downturn or a significant crash, you sell your investments before that downturn happens. By doing this, you've sold your investments at a high price and gotten as much money as you could for those investments before their value starts to drop. The reverse of this is buying heavily into an investment that you think is going to go up in value. Surely you've seen analysts on the news or online proclaiming their predictions. The stock market's going to crash. The housing market's going to boom. Buy now. All these analysts are trying to make a name for themselves by making really bold claims. Because in the case that they happen to be right, they can then point back to that one interview or article for the rest of their career and say, look, I correctly predicted the market. We all as investors want to make money with our investments. That's the whole point of investing the money. And so there will always be demand for analysts like this that can sell products or subscriptions to tell you what to invest in. Teach you how to time the market because the average person doesn't have the time to spend hours and hours researching stocks and companies to try and time the market. At the end of the day, you can spend as much time as you want researching and looking at trends, but you'll never be able to accurately predict the ebbs and flows of the market in the long term. If you try and sell before a crash, you'll inevitably miss out on days where the stock continues to go up in value, or miss the first few days when the stock rebounds after a crash. Anyone that tells you they know the secret to time in the market is likely trying to sell you something. You're much better off taking a long-term approach to your investments. If you've been investing each month, continue to do so even if the talking heads are arguing back and forth whether it's a bear or a bull market. In the long run, the best time to invest your money is now, today. Get started or keep your momentum going and let compound interest do the heavy lifting for you.